Welcome back. Now, China stocks ended lower this morning, but losses were, however, limited. And this comes as investors expected further stimulus measures, and particularly from policymakers, to shield the world's second largest economy from the impact then of the coronavirus. Now, market participants have sufficient expectations of policy support from Beijing in particular, as analysts slash their growth forecast for China to lows not seen since the Cultural Revolution, which ended in 1976. This comes as the coronavirus outbreak takes its toll on the world's second largest economy. Nearly every stock market in Asia was down and circuit breakers were hit, all in Seoul, Jakarta, and even in Manila. The sell-off followed an attempt to stabilize the morning trade as well, with an ECB pledge to buy $820 billion in bonds through 2020, offering some support. In the afternoon, the U.S. Federal Reserve promised a liquidity facility for money market mutual funds, while the Bank of Japan made two unscheduled bond purchases totaling $12 billion. So, how does the market look? Well, unfortunately, the Nikkei in Japan fell off more than 1% to close off trading at 16,552 points there. The Hang Seng is also down in Hong Kong, 2.6% down for that one, 21,709 points, with the Shanghai Composite closing losing close to 1% as well at the end of the day, 2,702 points. Over onto the United States, then U.S. stocks deepened their sell-off last night, and the Dow erasing virtually the last of its gains since President Donald Trump's 2017 inauguration, as the widening repercussions of the coronavirus pandemic threatened to cripple economic activity. Now, the benchmark S&P 500 index ended down 5.2%, though it did manage to pare losses late in the day as the U.S. Senate passed legislation to provide billions of dollars to limit the damage from the outbreak through free coronavirus testing, paid sick leave, and expanded safety net spending. In a move likely to add to the anxiety, the New York Stock Exchange will temporarily close its trading floors and move to fully electronic trading starting from Monday. All right, let's take a look at how the markets are faring out in Europe then as well. Of course, the picture's bound to remain almost the same then when one considers the fact then that markets themselves have hovered at these downward and depressed levels because of COVID-19. No full response has necessarily reassured the markets. All the bazookas seem to have been used up as well when it comes to the US and even in Europe. Have we used up our biggest bazooka here internally as well? That will certainly be in the form of fiscal stimulus and monetary stimulus, which we'll get a sense of later today. So this is how things are faring right now when it comes to the local bourse. Overall, we're down, with the industrials, however, going up. The financials are down, and a big note to make there is certainly Capitec having fallen tremendously earlier today, below 600 Rand even a share, having started the year around 1,500 Rand a share. That has been absolutely calamitous. Of course, yesterday we still saw some of the other banks also lose some trading some numbers as well there. The likes of Standard Bank going down 13%, PSG losing 26%. Even in mining, we saw Anglo American lose out quite extensively, with Implats as well around 13% down as well for that counter yesterday. So that seems to be a trend continuing into today. As you can see, most of the markets headed lower. On to the other segments then, and these are the commodity shares. As I made note of yesterday, the likes of Anglo American, the likes of Impala Platinum, hurting that platinum counter, which now is also sitting still in some negative territory there, an absolute shadow of where it used to be at around $74, 74 points, should I say, really. Gold counters not enjoying any success. So the safe haven trading that we thought would happen for the gold shares, meaning that people would move into gold, which would ultimately push up the gold counters of the gold companies, isn't happening at this point in time. And now we're seeing that price shoot down, sitting at 2,572 points. Moving on to the commodities themselves then, well, look, this has certainly been quite interesting to begin with. Let's start with the currency, 1732 against the US dollar. That still seems all right. We saw this actually ship all the way up to 17 Rand and 56 cents against the US dollar. Yes, it's not the worst, because the worst was early in 2016, where we saw an intraday high of 17 Rand and 95 cents for a US dollar. So we're hoping that that's not necessarily the case. But if you take a look at these two, which have been of massive interest, we saw a stimulus effort come out of Europe. So that means it's now moved very close to that British pound. Yesterday, weakness in that British pound picture coming through because of the stimulus effort with Europe. And of course, a large part of that European stimulus won't necessarily help the Brits as well, who are engaging quite ferociously as well in the Brexit saga. And it's a bit of a weird stimulus plan as well that the Brits have tried to put out there as well. So the Prime Minister not necessarily reassuring the markets, but we're seeing it sit just below 20 Rand there for a pound at present. All right, let's move on then to the next one. And you'll also see that the commodity picture is what I was talking about as well a little bit earlier on. And that oil price continues to dip lower and lower. Just how far can it go, I suppose, is the question. Will Russia, Saudi Arabia get back to that negotiating table? Will you find that the coronavirus impact will not be as severe on demand? Well, I can tell you right now at present that nobody seems to think anything contrary than to say that it will certainly impact demand quite ferociously. This continues to go lower and lower, even sitting below $600 a fine ounce at some stage. And one would have hoped that this would certainly have been picking up, because safe haven trading seems to have been the issue of the day, but it's not to be. So how about I ask Owen Nkomo from Nkunzi Wealth, who joins us then from the Johannesburg Stock Exchange, about that one, of course, and just exactly what does it mean not having the gold price head a little bit higher as well at a time like this. Owen, gold price at $1,477 a fine ounce. One would have thought it goes higher when everybody's looking for a safe haven. Why isn't it?
Yeah, it's tough in the trenches, man. It's difficult making decisions in the market at the moment. I've even taken off my jacket, Arabile. That's how difficult the markets are.
What's in the kitchen there?
But the price of gold, I mean, it's been an interesting one. We know that when the markets are nervous, everyone goes into the so-called less risky assets, and gold is one of those assets. And unfortunately, these are not normal times, Arabile. These are not normal times. So we're experiencing things that we have never seen, some of us, in our careers. And I believe that the divergence in expectations from what we are used to is it goes with the kind of times we're living in, given the coronavirus threat and potentially the aggressive limitation on global growth going forward because of this disease.
Yeah. So if we're expecting the unexpected, what's your most expectant view, if that makes any sense at a time like this?
It's very simple. Buy the markets while you can. If you plan to hold your shares for 5 years to 10 years and more than that, there's no better time to be buying than now. This is noise because we cannot digest the current information, particularly surrounding the solution to to the coronavirus. But importantly, we have seen many viruses come and go. We've managed to deal with the viruses. We dealt with one of the worst viruses in the world, which is HIV. We are still dealing with that, but I think we've managed to live a normal life. We've managed to see stock markets go up, and I do think that this is just a derivative of flu, which down the line a solution will be found to manage the spread of coronavirus. You're going to see headlines start changing to becoming more positive around markets, and in fact, indeed, to the management of the coronavirus itself. So just buy the markets while you can, in my view.
Yeah. If you're saying buy the markets while you can, what happens to those that are already in it? You've already lost so much, and you haven't necessarily divested. Do you stay? Do you sell? Do you buy more?
Look, if you have more money, I think you should certainly be buying more stock. You should be buying more into these unit trusts that you're invested in. You must be taking advantage of the U.S. markets that have also come off and invest in these international indices. Because what I've picked up across the country when we talk to people is that not many people have got offshore exposure. Yeah. And I believe there's no better time to be getting into the offshore markets like this one, given where the balance of scales in terms of the markets or economies doing well lies. If you look at South Africa and the challenges we're going to have to deal with inflation, with the lower growth in the current quarter, the first quarter of 2020 will be dismal. We're going to be in a recession, a full-on recession nothing technical, Arabile, and the currency is very weak, and I think the saving grace is just going to be oil. So I think you need to have a nice balance between local and offshore exposure. In my view, probably a 50-50 is going to be a better split, if not higher on the offshore side.
Yeah, but where? What do you get in a time like this? Do you go for the tech counters? Do you try and find the likes of Amazon, who, yes, in a time like this are hiring, but then if everything sort of calms down, they go back to normal trading?
Now, look, I mean, the challenge in my view with buying individual stocks, I just have to spell, African banks, Steinhoff and Sasol for you. You know what happened to those stocks? They all fell because people invested in one stock. But I guess if you have a very strong conviction around those shares, you can do so. But the best way to get into the markets, in my view, is to buy the indices, to buy the unit trusts. You know, some clients have been talking to us. They're seeing some of their investments falling, and they think we're panicking. The idea is not to panic. Just calm down. This will pass, and buy the sort of investments where you believe you can tolerate any further declines. I'm not in any way calling the bottom of the market. I'm just saying that looking at price to earnings and a whole lot of other matrices that we look at when we value shares, it's better to buy a diversified portfolio that will give you South African and international exposure. There's no better time to buy than now, Arabile.
Yeah, look, you have a better chance of calling the bottom of the market than I do, certainly. Look, we have the interesting element of the South African Reserve Bank's interest rates decision coming out at 3 p.m. That's, what's that now, in over an hour's time. Cut, no cut, obviously cut. How much?
Arabile, I say that the evidence on the ground at the moment, the falling stock markets, our worsening GDP, I think that the Reserve Bank is obviously expecting GDP to be worse off in this current quarter given the coronavirus situation and given the fact that our trading partners have closed their doors, they've closed their borders. We're not sending anything to some of these big international markets we've been selling. So we're going to have a very dismal first quarter. I won't be surprised if that number comes in below 0%, even 0.5% downwards. And I think therefore 100 basis points, in my humble view, should be a starting point for the Reserve Bank if we are to save the economy and if we're to give the banks and all the corporate employers out there a chance to make sure they can still service some of their liabilities during this time when things are very slow, Arabile. I think 100 basis points will be a decent cut.
Gee whiz. We certainly hope Lesetja Kganyago is listening, because that would be quite interesting as well. But, they're probably still in meetings and deliberating, and I doubt they'll be listening to us now. But let's see. Let's see what happens. Owen, really appreciate it. Always good chatting to you, bud. And hopefully we see you at the end, on the other side of a greater basis point cut from the Reserve Bank there. Owen Senzangakona Nkomo there from Nkunzi Wealth, joining us live then from the Johannesburg Stock Exchange. Now,